Hello, Midway University Eagles. My name is Peter Strauss. Professor Michelson has asked me to speak a little bit to you guys about credit. I am the owner of a mortgage company in New Jersey, where Professor Mike is from. There's my business card for proof. We're speaking right now from my office in Tinton Falls, New Jersey, the Jersey Shore. And wanted to spend a couple minutes to kind of educate you guys on kind of the do's and don'ts about credit, especially being young. It's very important to build a strong credit background report. You can make mistakes at a young age that will actually impact you for years to come. So please don't be intimidated. A lot of this stuff is very basic. You can look a lot of the stuff up on the internet. But in my 30 years of experience, I've probably looked at 35,000 credit reports myself. My credit has gone up and down over the years. So again, just take a listen. Hopefully you can pull some good information out of this that you can use. And if there's any questions after my video here, please pass them on to Mike, who, by the way, did his first purchase mortgage way back when and is one of my closest friends because I like to hang out with older people. Just kidding, Mike. So let's talk about credit. So credit really stands for Fair FICO. You might have heard that term, Fair Isaac Company, which is really a composite of the three credit bureaus, which are TransUnion, Equifax, and Experian. So you can have a range of scores. In lending, in the mortgage business, we use the middle score. So if you have a 690, 710, 720, we would lend off a 710. However, if you go for a car or a credit card purchase, they're going to usually use one score. There's also, it's called a soft pull and a hard pull. A hard pull is when you're getting your credit run and it's going to show up as an inquiry, which we'll talk about in a little bit. But really, credit comes down to a couple things. The obvious thing is what? How do you pay your bills? Paying your bills on time, very important. You really can't have bad credit if you do that periodically and do not miss. However, there's a couple misnomers. One of them is your balances. So your credit score may not be that high if you have a maxed account. What's a maxed account? Well, let's say you just opened up a Visa account and you went on a vacation or made a purchase and your limit is $5,000 and you owe $4,500. Not good. That's actually going to hurt your credit. So about 35% of your credit score is comprised of how you pay. About other 30% is your availability, right? Because it's about risk. So if you have a credit line where you owe, say, less than 30% of it, for example, on that $5,000 credit card, if you owe $1,000, $1,500, it won't hurt your credit. So watch what you owe and how much you owe. You always want to have high limits with small balances. Another part of your credit score is comprised of inquiries. You don't want to go crazy and apply for a million different places. That will bring your scores down. Inquiries generally represent about 5 to 10% of your credit score. And there's other composites. Being young or in college, history is important. Generally, that's about 15%. They want to see a long line of open accounts. There's some other factors, but that's really the big main ones. So if you're young, under 25, it's really hard to get a super high score because you don't have a long history of credit. What's really good scores when it comes to credit? I'm old school. To me, anything over 720 is excellent. FICO scores will range from as low as 350 to as high as 850. To be honest with you, a corpse can have 500 credit. So definitely you want to be in the 700 range. Don't lose sleep if you're a 738 or a 728. 740 and above is top tier. People like to brag they have 800 credit. Really, it's just for bragging rights. Anything above 740, excellent job. You want to keep an eye on your credit. Credit Karma does that for you. You can subscribe for that. But basically, that's really it. Pay your bills on time. Watch your capacity or your debt load. Try not to apply to a lot of places. And then don't do this. It's a common mistake. You get upset with one of your, say, accounts and you close that account. That's not good. A little trick of the trade is, say you open up a store account, Home Depot, you use it once, you pay it, put it in your drawer or your pocketbook or wallet, and it looks like every month your credit is paid on time, even though you only used it 1 or 2 times. So don't close your accounts. Try to get 3 to 5 solid accounts. I'm a big American Express person because obviously you have to pay that off every month. Look at the interest rates, obviously, on your credit, but that's really a down and dirty. Everything else is really minutia. Pay on time, watch what you owe, how much you owe, what your balances are. If you do that, you'll be in great shape, and you'll be buying a home one day. Hopefully, you want to have really high credit because, believe it or not, sometimes it's more important to have high credit than money in the bank. That's pretty much all I got for you. If you have any questions, again, feel free to pass them on. Thanks for your time. Go Eagles.